615,000 Singaporeans. That's how many people own Singtel special discounted shares that they bought in 1993 and 1996 using their CPF savings. Now, fast forward to 2026, a law was passed that wanted to have those shares transferred to the holders' accounts. Now, if you are one of them, or you know someone who is in this group, you're probably wondering, what do I do with them now? Well, you're in luck because this episode is for you. You're listening to yet another episode of the Money Talks podcast with me, Andrea Heng. And today we're going to be talking about Singtel's special discounted shares, or SDS, and what you can do with them if you've decided you want to let them go. Well, joining me for this podcast is Chua Ewan, Head of Investment Products at DBS Bank's Consumer Banking Group. Welcome to the podcast, Ewan.
Hello, hi.
Hi. So, do you know anyone who owns Singtel SDS?
Yes, many people. I guess in the SDS goes back to 1993, right?
Yeah.
So I think people who own the shares who are of a certain vintage, many of them will actually have owned the shares at some point. And actually, you said 615,000 still hold on to them.
Yeah.
And that's about 3.6 billion in total value today.
Oh, thanks for putting that into context. I didn't realize that's the value that we're thinking about, right? Because my parents, both of them, have these shares, and they had the letter. And they were asking me, hey, so you host this podcast. Tell me, what do I do? So I say, I'll do you one better. I'll do an episode on it. So very quickly, right, especially for those like me who had no idea what they were before this came about, can you tell us in a nutshell what exactly are Singtel SDS?
So the SDS scheme goes back to 1993 when Singtel listed. So it was Singapore's way of giving citizens a direct stake in the company as it grew. So in 1993 and 1996, eligible CPF members bought the Singtel shares at a discount. So like you said, quite a number of them have held on to this day.
Yeah, exactly. And I like how you called them vintage. Okay, so let's fast forward to this year, 2026, right? We saw Parliament passing a new law that allows these shares to be transferred to the holders' CDP accounts. So if I have some of these Singtel shares and I've decided that I want to sell, what do I do? What do I need to do?
I think first, there's absolutely no rush.
Okay.
Just because this is not free money that has fallen from the sky. It is your own investment that has become more flexible now.
Because it came from your CPF
Yes.
savings, right?
Yeah, absolutely. So on 21st November, what will happen is that the shares will then move out of CPF custody into your own account. And if you do nothing, that will automatically happen.
Okay. What if I don't have a CDP account?
So if you do not have a CDP account will be open for you to custodize only the Singtel shares.
Right.
So that will also automatically happen.
Okay. So that's quite convenient
Yes.
then. I don't have to do something right
Yeah,
away.
there's absolutely no rush to do something
Okay.
now. Yeah.
Mom and Dad, we're all right, okay? All right. And so can you then walk us through the different ways, whether it's online, through a broker, or at the physical financial institution, right? Because we know that a lot of people of the age group that own Singtel SDS shares are of a certain vintage, like you say, and they prefer to go down physically to get it done. So maybe in these three ways, online, broker, and a physical location, what's the step-by-step procedure that they're going to have to go through?
Okay. I think first, check how much you own.
Okay.
And you can do it on the Singtel website, sds.singtel.com,
Okay.
or on the CPF dashboard using your SingPass.
Okay, that's easy. Step one. Yep.
Today, there are three options to sell. So first, you can go down to SingPost physically.
Okay.
And then you bring your NRIC and you bring your CPF letter, and you will be able to receive the proceeds within 14 days.
Okay.
And alternatively, you can do it online.
Okay.
So on Philips Securities, and that you will need your SingPass. And But do bear in mind that these two options you've got to sell in full.
Right. So
Yeah.
if I do it physically and online, I have to do it in full.
Yes.
So what if I do it through a broker then?
Okay, there are selected brokers that you can deal with, like DBS Vickers, and for that it's more flexible and you can sell in parts.
Right.
So that's before 21st November, and your cash will go back to your CPF ordinary account.
Okay.
So, but for SCS proceeds, the CPF withdrawal conditions are waived. So you can choose to withdraw the proceeds in cash.
Right.
And that will go into your bank account registered with CPF or your NRIC Pay Now account.
So there are options.
There are
I don't
options,
I'm
yeah.
not held hostage to just one way or the other,
Yes.
right? Okay, that's
Yeah.
good to know. What are some common mistakes or risks that SDS holders should watch out for in this process?
I think one of the biggest things to watch out for is scams.
Oh wow.
Yeah.
I was thinking, rushing into it, but no scams, you're right. Yeah.
I think just be wary that if anybody calls you and tries to help you to sell your SDS, then just end the call. Go through official channels, and if you are unsure, just call Scam Shield.
Yeah.
Yeah. So, and another thing to be mindful of is today, if you sell through Singpost or through Philips Security, you have to sell in full. And on the 19th and 20th of November, that's you cannot trade on these days. Yeah.
So even though the changes take effect on the 21st of
Yes.
November, there needs to be a 2-day buffer
That's right.
where trading stops, right?
That's right.
Right. So
Yeah.
if you do want to sell it in full, you have to do it before the 19th of November.
Yes.
Got it.
Yeah.
Okay. Just because you can sell doesn't mean you should. Right? So who might want to consider holding on to these Singtel shares?
I think it really depends what stage of life you're at and what you need the money for. So if you think of your SDS as a small bonus income stream,
Okay.
then there's absolutely no need to sell it just because you can now.
Yeah.
So
So just keep it running in the background.
yeah, because if you look at the Singtel dividend yield, that compares really well to the 6 months T-bills at 1.4%.
And it kind of beats
Yeah.
inflation too at the current moment,
Yes,
right?
yes. So I think it really depends whether you have a need for the money. Yeah,
And I suppose that in order to determine that, you need to take a look at your liquidity.
absolutely.
Okay. So on the flip side, who should be thinking or who would be thinking about selling?
Okay, if you have a clear, better use of the money, like if you need the money to cash a high interest debt, or you need to fund a near-term expense, like, maybe you're moving house, you need renovation, etc., or you're just uncomfortable with having stock market volatility, then then you can consider selling. But I think bear in mind that it's not all or nothing. So you can sell some, you can keep some. I think one thing to be mindful of, if this is your only investment, then you're highly concentrated into one stock. So then do consider whether you want to diversify into a professionally managed portfolio, which there are options there.
Yeah, and you don't have to have a whole lot of money to do that.
Yes.
There is a very reasonable minimum to get started,
Yes.
as we always say here
Yeah.
on the Money Talks podcast, right? Are there fees involved if we decide to sell these shares or do a partial sale and then diversify it, like you said? What are the costs involved?
Okay, so after 21st of November, so the SCS will move into your CTP account. You can sell it through any brokers like your normal Singtel shares. So with any share trading that comes with all the different fees, that's very platform dependent. So
Okay.
that still remains.
Okay, then that's
Yeah.
a cost that we have to
Yes.
have to bear in mind,
Yeah.
essentially. Okay, so let's broaden this and look at shares as a whole, not just Singtel SDS. For some investors, selling can actually be more difficult than buying, right? What are some of the reasons behind this feeling?
I think there is seller's regrets and buyer's regrets. It's very common.
Yeah.
And market can move either ways. So I think it's helpful to know what the two traps that people tend to fall into. One is regret aversion. So the fear of selling and then watching the share price go up tends to be greater than, holding and then watching the price go down. So
yes.
people tend to do nothing.
Yeah.
So, and then second is endowment effect. We tend to overvalue what we actually own.
Right.
So the Singtel shares that which we have bought at a discount at 1993 actually carries more emotional weight beyond the actual market value today.
Yes. Yeah, I get that. I mean, especially since, all at the time it was being offered, it was meant to rally, a sense of nationalism also, right? And I think that's why some people feel that emotional
Attachment.
attachment. There's the sentiment
Yes.
there. How detrimental is that though? I mean, could they be losing out on something if they hang on to it for emotional purposes?
I think back to what we said, right? Always be very clear on the reasons if you have a better use for the money. So in terms of if you think if you are selling to clear debt or to fund an expense or to diversify, so these reasons hold true regardless of how the shares move.
Yeah. Is it do you think it's necessarily a bad thing to stay in the game because you do have a soft spot for that particular stock or company? Because we've had guests on the show before talk about, how sometimes you choose a stock because you believe in the company and the company's trajectory and growth, even if it means having to stomach some of the downturns, right? What do you think about that?
I think in investing, it's wise to take a long-term approach and to be prudent. I think diversification is the key. If this is a small part of your entire portfolio and you believe in the company, yeah, sure, just hold on to it. If you are fully concentrated, then do consider diversifying even partially, because I think that would be prudent.
Yeah, I think, and it's you're kind of moving money in a way to other products, right? Okay, so let's say I've sold my shares, and then the stock shoots up the next day. Something that you talked about, right? That cognitive dissonance in a way, right? How common is this? Do you see it in a lot of investors? This buyer's remorse or seller's remorse?
I think back to the point that as long as your rationale is clear, then no matter how the stock moves, it doesn't really matter. What I would caution against is revenge trading. So
so you want to buy back in, right? You're like, oh, that's when the FOMO really hits, and you're like, you see the stock moving up, and you're like, okay, I gotta go back in.
Yes.
Yeah. What do you say to that?
I would say don't take excessive risks just to try to make back the money you perceive you have lost. So I think what you should ask yourself is that, if you have cash, would you buy back at this current price? If not, then the regret is emotional.
Yeah, and then you really have to have closure and say, you know what, it's time to move on.
Yes.
Okay.
Yeah.
Once the cash from the sale is in my account, say I've sold the shares and the cash is in my account now, how do I go about thinking about redeploying that money responsibly? You talked about taking that money and diversifying my options, my portfolio as an option, right? What would be a wise approach when I do that?
I think the wise approach would be to spread it across sectors and also asset types that are matched to your time horizon and risk appetite. And that differs person to person. So in the market, I think there are many options which we as a bank also provide.
Yeah.
So certainly there are many options. So do assess it holistically.
Okay. I think it's important to remember where you are in life. What your liquidity is like, because if you don't have a very long runway, you may have the liquidity, but you may not have the time to stay invested. And if you're going to take a long-term approach, then you need to think about the time frame as well.
Absolutely.
Right? Okay, so let's wrap things up now. What's one thing listeners should do this week, whether or not they own Singtel shares, to be more prepared for the day that they have to cash out an investment?
I think to have a clear decision matrix, be very clear with yourself, the rationale of your investment actions, why you do something. I think none of us have a crystal ball of how the markets move, right?
Yeah.
But as long as you're crystal clear on the rationale, then I think there wouldn't be any seller's regrets or buyer's regrets.
Okay.
Yeah.
Fingers crossed.
Yes.
Fingers crossed. So is there a recommended review period that, I think even if we are staying invested in the long term, I think it's important to review our portfolio every now and again, right? So what's a recommended time frame to do that in this situation?
I think minimally we should all review our investment portfolio every year, because as as time moves, as we age, as different circumstances happen, our financial needs also change.
Yeah. Do you have a favorite time of year that you do this?
I do it in December when things are a bit quiet.
Yeah, when bonus season hits and all the money
yeah.
is spent on Christmas shopping.
Yeah.
Yeah, you got to do a recap, right?
Yes,
Okay,
yeah.
maybe I shall schedule mine in for December as well. Ewan, this has been the clarity that we really needed for not just Singtel SDS owners, but anyone who is thinking about selling any kinds of shares in the future. Thanks so much for walking us through the process.
Thank you for having me.
Yeah. And thank you, our Money Talks community. Hope you caught this one and hope you found this useful for you and for anyone who you know might be in the situation of owning Singtel shares and not knowing what to do with them. I want to leave you with a question now. Have you ever sold off an investment? I have. I've sold off ILPs in the past that I inherited from my parents when they bought it for me. And then I realized the process was actually pretty seamless. I want to know about your experiences and what made you decide it was time to let it go. I'm not going to break into song, I promise. Let us know in the comment section on wherever you are listening to us from. Or you can email us directly at cnapodcasts@mediacorp.com.sg. I'm Andrea Heng and I'm signing off for the Money Talks podcast. Catch you at the next one.